Good evening, friends. Welcome to our Patron live sharing class. I am very happy today because we India managed to overcome the top and win Hong Kong in the total number of supporters. Once again, it's my pleasure to be able to share with everyone here. I hope everyone in my class are able to follow up with my sharings and fully understand the materials I prepare for everyone. Please also take some time to read up again if you have made up with any doubts, and also put the materials you learn into practice, because practice makes perfect. Financial freedom is our goal, so let's work hard together to achieve it. As for today, I will continue to share more MACD trading techniques with everyone. Today's contents will be very important for everyone. This technique is able to help everyone to have a clear understanding about how to read the charts. Besides sharing trading techniques, I will also continue to scan for more profitable, high quality stocks, share market analysis, and guide everyone to a better future. Thank you once again for everyone's support. Okay, let's take a look for today's content, what we will be covering. Okay, same today we have 5 topics. Okay, let's move on to the stock analyst, the market analyst. We start off with Nifty. Let's take a look at the Nifty trend. The index, okay, as you may know, due to expectation of a rate cut in the US, the market has been very positive in the past few trading days. The Nifty index has risen for 5 consecutive trading days and has once again reached a historical high today. The current market situation is similar to the end of last month and the beginning of this month, meaning there are no high points for reference, and there are no technical positions to consider. Furthermore, the conservative rising small candles indicates a gradual upward trend. You can see here. Okay, small candles. There are 2 technical points to take note. 1, the index price has already risen to the upper edge of the rising channel. Okay, and there may be oscillation at this level in the short term, but ultimately there will be a breakthrough upwards. Point number 2, in relation to the second point, okay, here, as I often mentioned before, we can see in terms of the MACD indicator that its fast and slow line were originally about to form a death cross. Okay. However, with the price rise over the past few trading days, there are signs of the fast line and slow line of the MACD indicator once again diverging. Okay, you can see over the end of here, which often represent a strong trend and indicates the imminent emergence of a new trend in the market. Based on this alone, tomorrow's trend will be quite important. If the market continues to rise tomorrow, the fast and slow line of the MACD indicator will further diverge, providing evidence of an upward trend. Of course, in such a trend, it is difficult to make short-term adjustments. So, continue to be bullish and go long. Okay? Let's take a look at Sensex. For Sensex chart, which is roughly similar to the Nifty index with only minor differences. Currently, the price is oscillating upwards, relying on the support of the trend line below. We have always viewed this trend line as critical for judging the short-term market strength. If the price remains above the trend line, the strength is maintained. But once the price falls below this trend, the market situation will turn towards adjustment. Looking at the Sensex index, the fast and slow line of the MACD indicator below are tending to stick together. Okay, you can see here. And the signs of opening up and spreading are not obvious. Therefore, it does not appear to be as strong as the Nifty index. However, for the index, it is sufficient to maintain this situation. So, for the index analyst, it is sufficient to analyze either the Nifty or the Sensex index. Let's move on to the next topic. And by the way, it is very important for us to read up the latest news of the stock market or news related to the stock market. This is because all positive or negative news will affect the stock market, and it will also affect our trading decisions. Okay. Okay, first, let's take a look at the first point. Personally, I am also very excited and happy to see this news, because India is indeed experiencing strong growth, which is truly remarkable. So far this year, the India stock market has outperformed the top 10 global markets, ranking first. As seen from this chart, not only has the US stock market performed well, it has also been surpassed by India, okay, which is here. You see, US and India. This is one of the fundamental reasons why Petron Ventures place great emphasis on the India market. The rise of India stock market is due to strong microeconomical fundamentals and the flow of funds from domestic and foreign institutional investors. This fifth largest economy continues to hold the position of the fifth most valuable market, with a total capital of 4.16 trillion, representing a 24.8% increase from the previous year. The largest increase since 2021 and the fifth consecutive year of growth. With reduced concerns about US Federal Reserve raising interest rate, easing inflation, and a resilient job market, the US market leads with a valuation of 50.35 trillion, showing a growth of 22.61%. The Dow Jones Industrial Average, which is DJIA, rose by 12.8% for the whole year. As China is the second largest market, valued at 10.57 trillion, but experienced an 8.81% decline in 2023, which is this year, due to the challenges of a real estate contraction and slow recovery from COVID-19. The Shanghai Composite Index fell by 5.7% in 2023. Okay, let's take a look at Hong Kong. It's ranked lowest among the top 10 global markets, essentially placing it at the bottom along with China. In this context, it is natural for India to surpass Hong Kong and take the first place in terms of population comparison, which is mainly due to everyone's support. Okay? Back to India. Its strong performance, supported by a robust economy, has increased its contribution to the global market value 3.4% last year to 3.77% in 2023, which is an increase. This optimistic GDP forecast supports a bullish market stance, and the market's performance reflects this. Okay, let's move on. Next is also another uplifting news. Okay? According to the report released by the Center of Economics and Business Research, India is set to become the world's third largest economy by 2032 and ultimately surpass China and the United States by the end of this century, becoming the world's largest economic superpower. The report states key driving factors include India's large and young population, growing middle class, vibrant entrepreneurs sector, and deepening global economic integration. Okay, I believe we talked about young population before. Okay, half of India's population is below 30. Okay, CEBR stated in its report that India is on track to become the third and eventually the largest economic superpower, with its GDP projected to be 90% higher than China's and 30% higher than the United States by the end of this century. This is quite impressive. Many people may think or might have questions like, how does this concern me? No matter how powerful a country development is, I still have to live on my own life. Am I right? In fact, it's not like that. When a country economy is very strong, various aspects of people's livelihood, public facilities, and citizens' welfare will gradually improve. If this is not important, then think about why so many people want to go to the United States, even though many people immigrate illegally. It's because it's the world's strongest country, which guarantees the minimum standard of living for ordinary people and provides more opportunities for success. Personally, I sincerely hope India can become the world's largest economy sooner, as soon as possible. Okay? At the very least, I will be very proud, and I believe everyone would feel the same way too. Okay, let's move on. Okay, let's take a look at another piece of news. A report released by the Reserve Bank of India on Wednesday shows that the ratio of gross non-performing assets, which is GNPA, in the Indian banking industry continued to improve in the second quarter of this fiscal year, reaching a new low in the past decade. The Reserve Bank of India stated in its report that improvement in quality of bank assets, which begins in the 2018 and 2019 fiscal year, has continued until the first half of 2023 and 2024, with the gross domestic product ratio dropping from 3.9% at the end of March to 3.2% at the end of September. Banks are closely related to our life. But what does this have to do with our stock market? Do you guys remember when I mentioned whether funds are the direct cause of rising stock, the price? Banks represents funds, and all the currency or money circulating in the society flows out of a banking system. Furthermore, from this news, the improvement in the quality of bank assets indicates a decrease in bad debts in the banking system. Why are there fewer bad debts? Because of strong economic development, companies of all sizes are seeing an increase in profit margin. When companies have money, then they will not create any bad debts for the banks. More directly, the rapid increase in profit margins of various companies of all sizes has also stimulated the rise in the stock prices. So, do you think these microeconomical aspects of the news are important reference for our market analysts? Although these macroeconomical aspects of the news will not specifically tell us which stocks to buy, they will not tell us, right? But they at least provide us a practical and theoretical basis of grasping the general trend. That's what I mentioned at the start of this topic. News are important information. So, if you guys have time, you all should read up on all the news. Make it a daily habit. It will actually help you to improve in trading. Okay, let's move on. Next topic, classical tactics. Okay, in my previous class, I already introduced MACD indicator and MACD aspects, right? Some of aspects with everyone. Therefore, today, I will continue to share more MACD related topics with everyone. What I'm going to share tonight is very crucial or important aspects of usage of a MACD indicator. It is the concept of divergence that many people often mention. Divergence in MACD refers to the divergence relationship between the DIFF line and the DEA line, and also the stock price. Okay? It usually clearly indicates the bottom or the top of a trend, which is very important guidance for our daily trading. So guys, if you are seriously interested in learning more and wants to improve your stock trading knowledge, please attend all my online classes. Also, remember, whatever knowledge you obtain is all yours. Okay? And if you put in time to learn, you will be better and better. Okay, let's continue with the specific content of the MACD. Okay, let's take a look. What is the divergence? Divergence itself is a term used in physics to describe kinetic energies. In stock trading, it is highly successful and widely used analytic methods. Divergence can be divided into two types: bearish divergence and bullish divergence. Okay, let's take a look at the graph. Okay, this is graph 1, this is graph 2. Okay, for graph 1, in an uptrend, when the stock price reaches a new high, but the indicator line does not, it is called bearish divergence, indicating that downward momentum is building up. And it is a sell signal. Okay? Over here. Okay? Sell signal. Give you a sell signal. Okay, for graph number 2, which is this. In a downward trend, okay, a downtrend, when the stock price reaches a new low, but the indicator line does not, it is called bullish divergence, indicating that upward momentum is building up, and it is a buy signal. Okay, you can see over here and here. Okay, let's move on with more details. Points to note when using divergence. Okay, there are 3 points. Okay, we already know that divergence of the MACD indicator can clearly indicate the temporary bottom or top of the price movement process. But is it powerful? Are there any points to note in the process of using it? Obviously, any indicator has points to note or consideration in its use. Even though that the MACD indicator is known as king of indicators, but the same applies. Okay, let's take a look at point number 1. Without a trend, there is no divergence, because divergence can only be established in a trending market. Divergence is actually a comparison of the momentum between 2 complete trends in the same direction. And in this case, divergence may occur if there is no trend, there is no divergence. This is the minimum requirement. For point number 2, it's about the applicable of divergence. In fact, the essential of divergence to describe momentum. So it also applies to some trending indicators. Okay, in these indicators, using divergence can often accurately grasp the major market trend. But we won't discuss others today, because today's content is mainly focused on the MACD. Okay, for point number 3, it is the frequency of divergence. For bearish divergence, the more frequent occurrence at the top, the greater probability of a downtrend. It is similar for the bullish divergence. The more frequent occurrence at the bottom, the greater the probability of stock price rising. As for the phenomenon of multiple divergence, it actually occurs relatively less frequently in the market. So once it occurs, its value is higher. And of course, none of these points are absolute, because we all know that there are no absolute certain indicators in the world. Next, we will specifically learn about 2 types of divergence. First, we start off with bullish. Okay, the bullish divergence between the DIFF line and the stock price in a downtrend refers to the situation where price hits a new low, but the DIFF line does not. Okay, you can take a look. Okay. This indicates that during the stock price decline, the decline of the DIFF line is smaller than the stock price, showing that the uptrend momentum in the market is continuous building, and there is a high probability of the stock price to rise. You can see from the chart that after the bullish divergence occurs, a trend of rapid upward movement quickly erupts. If we can seize such opportunities, can't we harvest more profits? In practical terms, investors use the bullish divergence between the DIFF line and the stock price to find the buying points. Okay, and need to pay attention to the following aspects. Okay, what aspects? Number one, situations of the secondary bullish divergence and even multiple bullish divergence. Sometimes the DIFF line and the stock price even show secondary bullish divergence or even multiple bullish divergence, which are strong signals of an upward trend. It indicates that the market upward momentum is very strong, and the stock price will soon experience a large upward trend. So in general, a single bullish divergence is more common, while double or multiple bullish divergences are relatively uncommon. However, this rule is not absolute. Sometimes when the fundamentals of the stock change and the price trend enters a bear market, the stock price may continue to hit lows, new lows, and although the MACD indicator show bullish divergence or even secondary bullish divergence multiple times, it cannot completely reverse the downtrend. Okay? For number two, specific timing for buying. The bullish divergence between the DIFF line and the stock price is not a specific point in time, but a pattern that occurs over a period of time. However, when investors buy stocks, it is a specific time or position. Therefore, to grasp the specific timing for buying when the bullish divergence between the DIFF line and the stock price occurs, investors need to combine the bullish divergence with other technical analysis tools, such as candlestick patterns, to specify the buying point for the bullish divergence. Okay, let's take a look at the next one. Another case for a bullish divergence, where a clear MACD bullish divergence signal has emerged. The bullish divergence occurs after two distant downward trends, making the signal relatively reliable. On one hand, the duration of and extent of the decline were sufficient, leaving little room for further downward movement. Okay? You can see? But the price did not. Okay? Indicating that buying side energies was insufficient. Only after another decline and energy accumulation could an upward movement unfold. Due to these reasons, after a bullish divergence occurs, a significant upward trend is formed, offering a substantial profit potential for those able to capitalize on such a trade. So we have talked about bullish. Now we move on to bearish. So, same question. What is a bearish divergence? A bearish divergence between the DIFF line and the stock price in an upward trend refers to the situation where the stock price reaches a new high while the DIFF line does not. Okay, you can see it's actually the opposite. Okay, this indicates that the downward momentum is continuously building up in the market, and there is a high probability of a subsequent downward trend in stock prices. You can observe the position of marked as 1. Okay, here, which correspond to the occurrence of a bearish divergence at the top. Similarly to the bullish divergence, investors use bearish divergence in practical scenarios to identify selling points. Okay, one is buying and the other one will be selling. Paying attention to the following aspects. Okay, number 1, secondary and multiple bearish divergence. In an upward trend, the occurrence of a secondary or multiple bearish divergence indicates a relatively strong downward momentum in the market, and the stock price are likely to experience a rapid downward trend. For example, in this chart, a single divergence occurs. It is worth noting that in a major bull market, bearish divergence sometimes do not lead to significant declines, just like the current stock market in India. Point number 2, which is specific selling time. The timing of selling is to some extent more important than timing of buying. The difference between the two can be summarized as being cautious when buying and slightly more aggressive when selling. Okay, there's a difference, huh? Generally, buying requires extreme caution, with several outward signals appearing, resonating over several periods, and maintaining consistency with overall market trend before buying can be confirmed. On the other hand, selling can be more aggressive, with the principle of better early than late. Okay? And even as soon as a selling signal indicates the impending downwards trend, one should exit as quickly to preserve the profits. Okay, if you exit late, your profit gets lesser and lesser, right? Therefore, while the selling timing for bearish divergence still need to be comprehensively evaluated in combination with other technical analysis tools. It can be more flexible. Common selling timing includes bearish divergence plus the K9 reversal pattern and bearish divergence plus the death cross. Okay, these are other tools that we can use. Okay? Okay, let's look at another case where the MACD indicator also shows a bearish divergence, followed by a period of decline. In this case, there are two important points to note. Okay. First point, regarding the MACD indicator, the DIFF line may appear to be parallel, but it's actually not. Okay, if you can see for this one. Okay. On one hand, we can judge by observing the values of DIFF. The previous high point and the high point before that, even if it's horizontal, as long as the price makes a new high, and the DIFF does not, it can be considered as a occurrence of a bearish divergence. Regardless of the analysis method used, price is always an important reference. Point number 2. When choosing of the time of selling, follow the relaxation principle, which means that in the selection of the selling time, you can relax a bit. As long as there is a slight sign in the chart or the indicator, you can execute the selling action and exit as soon as possible. This is to focus on locking in profit first. Taking the chart as an example, if traders can follow the bearish divergence method, they can relatively accurately seize this selling opportunity. Can this help to lock in more profits in advance? Okay, that's all for here. Let's move on to profit statistics. Okay, friends, since last Wednesday, we have been using the interest-free funds for trading, and our accumulative returns have reached approximately about 50%. I believe obtaining such a return or such a profit is almost unknown in the market. And just to remind everyone that profits can be freely withdrawn after the trial period that will end. Our ability to lead everyone in the trading stocks with UC limits for quick profits fully demonstrate the advantages of the Petron Ventures company's asset management account, which cannot be enjoyed with a regular trading account. Okay, there's a difference. Just to inform everyone, our original interest-free funds usage, the period was actually 5 days. To express my gratitude for everyone's support, I personally sent a request to the company's headquarters to request for an additional 2 days of usage time, so everyone can use it for a total of 7 days. And this is a way I want to express my thank you to everyone for supporting me and my team. Thank you very much for that. If we can earn 10% every day during these 7 days, based on my calculation, the profit earned will be very amazing. That will be around 95%. But of course, it is important to clarify that slots for these trading stocks with the UC limits are not unlimited. Okay, they are not unlimited. Currently, we have a large number of members, and the numbers is still increasing. Therefore, it might not be able for everyone to participate in trading the stocks with UC limits. Some friends may not be able to participate in these trades, but I personally will do everything in my power to apply for more slots for everyone. We are now even negotiating with relevant institutions for new strategic trades, ultimately aiming to increase everyone's profit. And once again, I want to express my gratitude to everyone for supporting me and my team, and for helping our India region securing the first position in the support contest. Thank you very much. Jahi. Okay, let's move on to our stock analysis. As I mentioned before, I will do my part to track and analyze the stocks that we previously recommend to everyone, regardless of the price movement, whether it went up or goes down. We will continue to track and observe the stocks. Since entering the Indian market, Petron Ventures has always been committed to serve everyone with a sense of responsibility to all our members. We will track all recommended stocks until the end. Therefore, we have gained the trust and support of our members and friends, and I would like to say thank you once again to everyone. Let's move on to the individual stocks. Okay, start off with Saregama. Okay, let's take a look at the stock. This company is the most famous audio entertainment company in India. We have always considered it as a good company, okay, based on their records. The market underwent an adjustment last Wednesday, and Saregama followed the decline. Actually, many friends started to panic, but there is no need to. Look at the price. The price has risen again, isn't it? Technically, last week price adjustment confirmed a pullback from a previous rebound from high point, and then continued to rise after testing. Personally, I suggest continue to hold for this stock. The current price is just near our cost price, and it seems that the trend will continue to rise. Okay, you can based on this chart and take a look. Okay, once the top price shows a profit, then we can plan maybe to exit. Okay. Okay, for the next stock, Adani. Okay, let's take a look at the stock. Adani Enterprise is also one of the leading trading companies engaged in power trading, coal trading, and agriculture product trading. It has also ventured into solar and battery manufacturing. In addition to the founder family trust, major shareholders of the company, okay, includes entities like Goldman Sachs and India Life Insurance Company. These two are very big. Okay, after a short-term support rebound, the stock has fallen again in the past 2 trading days. Currently, the support line seems relatively strong And even if the price adjusts now, it is unlikely to break the support line. As for the lack of current upward movement, from a technical perspective, its MACD fast and slow line are relatively high. Okay, you can take a look at here. Okay, quite high. Indicating the need for the market correction or a bullish momentum before another upward movement. Currently, although the stock price has adjusted, it is still above the support line. So, there is no need to be too worried about this stock. Okay, for friends holding on to this stock, you all can rest assured if there any unusual movement in this stock, we will notify everyone immediately. Okay. Okay, let's move on to Kota Bank. Okay, as for Kota Bank, we all know that it's engaged in commercial banking, investment banking, stock brokerage, car finance, asset management, and life insurance. It has an excellent operating conditions, and all economic indicators are steadily rising. The stock has been rising for 5 consecutive trading days, indicating an accelerating upward trend. It is expected to break the previous high or approach it in a short time. Okay, you can see here. Okay, it's going up. From the chart, okay, as I say, you can see it's going up gradually, with one recent level being surpassed after another. This type of stock is unlikely to experience explosive, rapid growth. It requires time to exchange for the space. Furthermore, we can clearly see that the MACD indicator is showing a standard bullish signal, with the fast and slow line crossing upwards and diverging, which is a typical bullish signal. As for this stock, it's advisable to continue to hold. Allow our profits to increase. For now, everyone can hold it with peace, okay, peace of mind. As for future strategies, we will adjust according to the real-time market conditions. If there's a need to exit for profit or specific price point, we'll inform everyone. Okay, let's move on. Next will be Star Health. Okay, Star Health is a standalone health insurance provider with coverage expanding to include health, personal accidents, overseas travel insurance, and it also offers customized policies tailored to individual, family, and corporates. Star Health is one of the largest private health insurance company in India. As we mentioned earlier, although this stock experienced a certain degree of decline, which is last week, if we took another look at this, it seems to be start to rebound. Okay, over here, with a consistent increase over the past 4 trading days, in line with the index. Technically, the price adjustments downward last week, precisely to the previous low position, which naturally forms a support line. Okay, support line over here. When the price fell last week, we mentioned 2 aspects. Firstly, to Do not sell the stock during a rapid decline. Secondly, the company itself has no major issues, meaning no any bad news about the company. And the price is in the bottom range, indicating that there is not much room for further decline. With the price already so low, how much further can it go? As for handling this stock, I still recommend on holding on to it. Okay? Okay, next stock. Infosys. Okay, Infosys Limited is a global technology service company that defines, design, and delivers business solutions based on information technologies for its clients. The company is a leading provider of consulting, technologies, outsourcing, and next-generation digital services, assisting clients in formulating and executing digital transformation strategies. It is the second largest software exporter in India, with excellent operational performance as evidenced by a consecutive increase in both operating income and the net profit over several years, indicating strong management. Despite recent negative news regarding orders, the stock price has rapidly rebounded, while global uncertainties and macro headwinds pose challenges. The tangible changes in stock price outweigh the negative news on orders. Okay? It is important to remember that regardless of positive or negative events or news, the ultimate impact is reflected in the stock price. Even significant negative news not affect the stock price if it does not fall. And similarly, significant positive news does not affect the stock price. It does not rise. This is common occurrence in the market. As for the stock strategy, I suggest holding for the time being, but once the stock price fall below 1,500 rupees, selling may be considered. Okay? Okay, friends. So today our live class will end here. Thank you very much for your strong support, and we will continue our class, online class, on this coming Sunday, 31st December 2023. Same time, 8 p.m. I hope to see everyone here, and thank you once again for all your support, and good night.